Oh, hello everyone, it's Susie here, Crypto Granny. The date is the 28th of November, 2022, and the time in the Netherlands, Amsterdam, Europe time is 18:39 p.m. So let's talk about the cryptocurrency market. Let's look at some of the stats, some of the information that I glean from the cryptocurrency market as well as the financial markets, the fiat markets, as well as talk about some of the main stories. Now, some of the main stories are exchanges. Certainly exchanges are on the agenda. So we'll talk about the exchanges, we'll talk about COVID, what's happening in China. They've got the risk market selling off on the weekend. We'll talk about the European Parliament that's got a new potential regulation that's got to go through for digital assets. We'll talk about SBF, Sam Bankman-Fried. We'll also talk about Black Friday sales. We'll talk about Putin. We'll talk about Justin's son, Poloniex, and Hubie, what potentially could happen there as well. And we'll also talk about Musk and Twitter, what's happening there, which is very relevant. We'll talk about BlockFi, which is applied, unfortunately, for a Chapter 11 today. We'll talk about the Fed and in the interest rate policy. And we'll also talk about very specific crypto exchanges, as well as just some of the stats and where I think the markets are going and this sort of thing. So let's go to the stats for cryptocurrency market. Market cap at the moment is 845 bill, quite low. It's still not back to about, October 2020, when the market cap was around 880 bill, 900 bill. Volume's low at 32 bill. Liquidity is about 3.188 bill, still low. And Bitcoin dominance is 37.01%. Bitcoin at the moment, as we speak, is at 16,277. Ethereum at 11,76. Binance at 297. XRP at 0.386262. Dodge at 0.0969. Matic at 0.8255. Just some of the things I want to bring out just in this. I also look at the futures for Bitcoin and Ethereum. Really, really important, because it tells you what the professional traders are doing on margin. They're clearly selling futures on Bitcoin and Ethereum. And the way you can tell that is because the futures prices for Bitcoin and Ethereum are lower than the physical prices on the exchange. Two different markets, two very different markets. Whereas I've said before, the physical exchange, where you physically buy Bitcoin with your own money and you buy Bitcoin, there's a low volume, as we know, maximum 21 mil for Bitcoin, etc., etc. Whereas the derivatives market, there can be so many open interests for buying or selling Bitcoin futures, and the same with Ethereum. So the volume that can be done on the derivatives market is so much higher than the physical market, and that is a problem. So if we look at the futures today, and when I looked at the futures, Bitcoin was around 16,375. It's slightly lower, about $100 lower. The futures were at 16,035 for the next maturity. Now, that's important because the futures price, let's forget about funding and make it very easy. And if there's a time difference between the spot Bitcoin price and the settlement date for the Bitcoin futures, we'll forget about that. But what it means is very simply, Bitcoin futures are roughly about $300 below the Bitcoin physical price. And that tells us the big whales, the big wholesale financial traders, the big market players are selling futures on Bitcoin, okay? When we go to Ethereum, we see the same thing. Ethereum, when I looked at this, the physical price was $11.82. It's currently $11.76. And the futures price was about $28 lower, okay? So again, we see that they're selling Bitcoin futures and they're selling Ethereum futures. And then if we look at the options, right, there's a lot of put options in play, bought put options, which means the market players, the big ones, are expecting the market to go lower, okay? Another thing I want to bring out and highlight is US dollar Tether and US dollar C. US dollar Tether is by Tether, of course, and US dollar C is by Circle. They've been trading around their peg, slightly underneath. So US dollar to Tether has been 0.999 something rather than 1, and USD Circle has been 0.999779, under 1. Now, Binance US, which is BUS, Binance US dollar, is trading at 1.02, which is higher than the $1 US peg. Now, clearly what's happening is Binance is getting a lot of the exchange flows after what happened with FTX and all the other institutions that are going broke or funds or whatever it might be. So what we can see, even without even knowing anything, we know the big players are selling derivatives. We know the big players are moving out of weaker exchanges, if you want to call it that, or, rated B exchanges and moving into rated A, AA plus and above, being Binance, okay? So money is going from the smaller exchanges to the bigger exchanges, and clearly people are buying Binance US dollar pegged coin against the US dollar, but they're buying it at $1.02, okay? So that tells you something, which is really important information. People are risk averse and they're sitting in the big exchanges if they're not going to hold their coin in their own custody with a hard wallet, okay? So that certainly tells you something. Also, if you look at the pegs for Bitcoin as well as Ethereum, and they're called wrapped Ethereum or wrapped Bitcoin, you find wrapped Bitcoin and wrapped Ethereum are trading lower than the physical Bitcoin curve and the physical Ethereum curve. When we talk about wrapped something, it's a structured product, so it's a little bit different. It's supposed to reflect exactly the same price as Bitcoin and Ethereum physical, but it's actually not, okay? The wrapped is actually showing a lower price than the Bitcoin and the Ethereum, which could be about liquidity and all sorts of things. But it certainly gives us information. It gives us information that the retail is buying crypto, BTC and Ethereum, and they're buying the physical. They're not buying with futures or wrapped or anything like that. Another thing I want to highlight too, before I get on with everything else, is the interest rate curve in the US, the interest rate curve, the treasury bond curve, has gone massively inverse. So the 1 year rate is at 4.74%, but a 10-year bond rate in the US is at 3.69%. So the curve is roughly about 110 basis points inverse. In other words, the longer end of the yield curve, the yield is lower in the longer end and higher in the shorter end, which reflects the rate hike policies of the US central bank, the Fed, and also reflects that the market believes going forward there will be recession/depression. So in other words, a 1 year rate goes from 4.74% to a 10-year rate of 3.679%. Now, in a proper functioning market where GDP growth's all good and everything's good, that yield curve should be positive for positive growth and obviously reflect more risk as you go out along the yield curve in terms of term, right? 10 year you should be getting paid more than, say, a 1 year. But clearly the market is pricing in recession, and I would say even the market is pricing in depression in the US. If we look at the interest rate curve for the euro, we only find with the same 1 year and 10 year rates, bond rates, the inversion is 10 basis points, not 1.10% or 110 basis points like the US curve. So the market is expecting the US to go through a worse recession than Europe. And this is what the yield curve is telling you as well, okay? And I think that's very interesting and important to note. Now, the Fed has basically made the economic situation for the US going forward, their base case now includes a US recession. You know what my thoughts are about the Fed? They have rate hiked too fast, too quickly. People are bleeding. They can't afford to buy things, right? Even though we saw the black holiday, what they call it, the Black Friday holiday, right, with all the discounts. Year on year, the spending was up 2.9%. Some commentators think that's, quite high. But, Black Friday sales, yes, they topped over 9 billion, 9.12 billion, up 2.3% year on year. But the reality is, right, there's massive discounts everywhere in the US. And yet, the increase in the Black Friday sales is only up 2.3%. This is not a strong figure at all, people, okay? It tells me people are really struggling just to live according, to pay for the cost of living. People are seriously struggling. And if the Fed believes that the US is going to go through a mild recession in the next 6 months, I think they have rocks in their heads. I think they live in white houses, glass houses. They live on huge incomes. They don't do the shopping. They don't live like everyone else. They don't pay the utilities. Their wife probably does, or whoever. And they get paid too much money to even notice the difference, whether milk goes up or whether bread goes up or whatever. Now, we know there are huge job cuts coming, and they're already in this system. Amazon is cutting work in India. Google's going to cut. Apple's going to cut. Twitter's cutting. Facebook, Netflix, Microsoft, Robinhood, Tesla, the Coinbase. It just goes on and on and on. Stripe, right? Also, BlockFi is going to get rid of a heap of people because they went Chapter 11, and clearly FTX is going to do the same. This is the start of higher unemployment, and yet the Fed, says now as a base case, we're happy if the US goes into recession. Are they mad? Like everything, they do things to the extremity, right? We saw it in 2008. They kept cutting rates until there was so much inversion in the yield curve. For a 100 or 50-year bond, you weren't getting any money as a return. You're actually paying the bank in custody fees, right? Just a joke. So, we know these guys do the extremity. But the thing is, my base case is they have raised interest rates too quickly, and we have all this unemployment coming through, and what we're seeing in the rest of the world is not great either. So it brings me into the COVID situation with China. COVID in China is still rampant. Every day I look at the COVID figures, and they're now 646 million. They are going up 3 million extra cases a day, when 2 years ago they were going up by 300,000, okay? COVID is bad in China. They try to have a zero COVID policy, but the anger is growing, amongst the public. Again, we're hearing things like, I would rather be free, liberty or death. Shanghai was closed down. People were in an apartment block that was on fire, and they were not allowed to come out of the apartment block because of COVID, which is just crazy, right? The Chinese have had enough. They've been watching people on the World Cup, which has been marvellous. I've loved every minute of it. And they're wondering, why aren't people wearing masks? Why are people so free? Whatever. And now you've got, people all around China. Basically, the anger's growing, and they're on the streets in a rare public display. It's the authorities, right? And this is unbelievable. I don't think I've ever seen this before. Even Apple is being severely affected by China. And I've mentioned this before, because their key manufacturing hub is in Zhangzhou. And, people have tried to get out of that Apple factory because there's COVID. But the thing is, the Chinese authorities are trying to lock them up, right? And even Apple's in a problem because there's going to be a shortfall of something like 6 million iPhones, which honestly, I don't think that's a bad thing anyway, because I don't like the Apple iPhone. But anyway, you can see the idea here. The Chinese have had it. And I remember being in Australia about a couple of years ago, and I was speaking to a Chinese student, and I met him in Australia, and he said he'd never seen the sky so blue, or the sky blue. And this guy came from China, which I was quite amazed. They've never seen a blue sky. But anyway, look, the laws in China are draconian, seriously. Now there's, the Chinese are basically holding up blank piece of paper. It's a sign, we're saying nothing, but it's a sign that they are challenging the Communist Party rule. They are sick of lockdowns. They are fed up with it. The Chinese property market is down about 30%, and it makes up 25% of the Chinese economy, okay? So what we saw on the weekend and Friday night was Asian equity markets very weak. This COVID protesting in China and Asia has made people, very concerned. It's also affected financial markets, and clearly crypto markets. And the case for COVID in China is just rising and rising and rising. There was something like 40,000 cases, and people are being arrested for civil disobedience and, in public, saying bad things against the communist leader, which just doesn't do when you live in a communist environment. So the next thing I want to talk about is the European Parliament, MICA. They've called it Markets and Crypto Assets. They've done, a whole thing, a standard for digital crypto assets. They want it to be a global model for crypto regulation. It'll be European supervised, with exchanges being supervised, wallets and everything else. They want it to be global. It's the first reading within the European Parliament for this standard for digital assets, and they want to implement this globally by mid-2023, which I think is a very, very good initiative, given what's happened in the cryptocurrency market in the last couple of months or something, which has been absolutely diabolical. And this leads on to Sam Bankman-Fried, who I've had enough of, seriously. This guy is just a fraud, right? But he knows everyone. He knows everyone in politics. He knows everyone in the Democrat Party. He knows the biggest, wealthiest people in the world. He knows all the institutions. He knows everyone, right? But the thing is, right, what I can't understand is why hasn't he been arrested? Bernie Madoff in 2008 with the pyramid scheme, and he was stealing money from his clients. Once the fraud came to the public or was known, Bernie Madoff was arrested, and within 24 hours, right, of the fraud being known. And he was put in jail for the rest of his life. But this fellow, Sam Bankman-Fried, just seems to be walking around like he's in La La Land. And yet, there's enough anger on Twitter and everything else that, I suggest that he probably get himself some security guards, because a lot of people have lost a lot of money, okay, like a fortune. And what's going to be interesting to note is Sam Bankman-Fried said a week ago that he was going to attend, sort of cough, he was going to attend a New York, deal book meeting, where he talks about, obviously FTX and everything else. So it's going to be very interesting to see if he shows up in New York, or whether he does it by Zoom or a video, or whether he gets arrested, because it just seems almost surreal that he hasn't been arrested. And maybe it's got something to do with, all those millions of donations he paid, Mr. President Biden. He gave him $10 million. For the Democrats, there was another $40 million donated, another $1 million, another $6 million to two groups in the Congress and the Representative House to keep the Democrats in public. This guy's being protected, and I can't understand why, right? Also, he gave away a lot of money for the pandemic relief in India and for anti-global warming. But, the thing is, why isn't this guy being arrested? I can't understand it. And now, allegedly on Twitter, there's all these YouTubers going to the Bahamas to see if they can have a meeting with Sam Bankman-Fried. And they've even been crowd-funded, which will be interesting. So I just cannot understand why this guy has not been arrested. I mean, even before the whole thing with FTX, they were sending money back and forth between Imelda Research and FTX, which was supposed to be different companies, right? And there was no protection of client money whatsoever. So, we just have to wait and see that story. But it really has got me why this fellow hasn't been arrested when clearly the money that he borrowed from FTX/Imelda Research was $1 billion. And he was able to buy 19 properties in the Bahamas worth about $120 million and all sorts of things. I just cannot understand this, okay? Mr. Putin, president of Russia, wants a blockchain-based international payment system due to the US sanctions against him by the US and Europe. Now, that doesn't surprise me. Very clearly, Mr. Putin wants to move cash outside of the fiat regulatory system and payment settlement system of SWIFT, okay? The US owns SWIFT. It's 1973. It's very old. It doesn't, give you money in cash within 3 seconds like XRP. But he's mainly doing it because he wants to be able to access his own money, doesn't want to have to go through the US SWIFT story. Plus, if you did that, it means you have to have US dollar bank accounts, which could be closed and seized by, the Treasury Department, okay? And the US, depending on their politics with Mr. Putin. So that makes a lot of sense. And, it wouldn't surprise me if he did that earlier than later, seriously, because it gives him a lot of flexibility on the funding side, and he doesn't have to go through the US. Justin Sun, and he's certainly one fellow to watch. He knows Changpeng Zhao extremely well from Binance. He knows Star Chu from OKEx extremely well. He knows the other Chinese founder from VeChain. This guy, Justin Sun, knows Jackie Ma. He knows billionaires all over the world, and he knows billionaires in China. Justin Sun, whether you like him or not, he certainly has the proof in the pudding, what he's done over the last 5 years. Now, Justin Sun acquired Poloniex from Circle, and he is now, on the board of Huobi, okay, and managing their strategy going forward to make them a global exchange, okay. Also, he's a part of Tron, the whole system network of Tron. And also, he also supports Binance CZ, right? Very much. And he said he was going to invest $2 billion in the Binance Recovery Fund. Also, Huobi, as you know, and I mentioned this before, $1 billion was purchased by an Asian fund. It seems like an equity fund or a venture capital fund. But there is a rumour out there in rumour land that Justin Sun could have been behind that and invested $1 billion in Huobi Exchange. Now, that would not surprise me. There's also talk that potentially Poloniex and Huobi could integrate. Notwithstanding at the moment they are independent companies, but there could be plans in the future to merge both of them, and that would certainly make sense because, as Justin Sun said, Poloniex only does 1/10 of the volume of Huobi, okay? And I think that, is right. I think he will do that. He will combine them for sure, and maybe even Tron, the ecosystem in some way as well. Justin Sun also said on Twitter he fully supports Binance Chain ecosystem and Binance US dollar stablecoin. And he said, we're actually going to have a big announcement. We're going to what he said exactly was, we will have a big partnership announcing soon. So watch out, girls and boys. Justin Sun is a very, very clever man, very, very clever. He has bought a lot of NFTs, all sorts of things, artwork via NFTs. The guy is very wealthy. His estimated wealth is estimated anywhere between, I know this is wide, 4 billion to 12 billion. The guy is extremely, extremely smart. So somewhere along the line, with Huobi, Poloniex, maybe even Tron, and all his other sister tokens within that Tron stable, there could be a big connection with Binance Chain ecosystem. So watch out. This is going to be very interesting indeed, okay? Very interesting. I can't wait to see what comes out Justin Sun, this big partnership announcement soon. I think it's going to be a big one for sure. So if we look today, another cryptocurrency exchange fell off its pedestal. BlockFi applied for Chapter 11. There's a bit of a story to this one, and I'll bring it to your attention. And Ripple actually said something about this as well, which I think is really interesting. BlockFi is going to lay off a lot of staff, just like FTX. BlockFi got themselves into trouble earlier than FTX, and they borrowed $250 million from FTX. Now, unfortunately, when they borrowed that money, clearly they were borrowing money from FTX, so they were forced to have all their crypto assets sitting with FTX exchange as collateral. So clearly the exchange goes down, they lose their assets, okay? And that's why they've applied for a Chapter 11 bankruptcy. But the thing is also, which I think is really important here, is BlockFi earlier than that was sued by the SEC for showing interest rate on products that the SEC deemed was a security. So they got fined something like 100 million or 200 million. Now, allegedly, it seems that potentially BlockFi, when they borrowed the 250 million from FTX, right, they may have used that to pay the SEC in penalties, right? Now, this makes it very interesting indeed, people, if this was the case. It's all allegedly, but I think it's very interesting if it's the case because it makes the SEC implicit. Effectively, if they borrowed money from FTX, then was that money from FTX client funds and not FTX's money? Because if they borrowed that money, BlockFi, which they did, the 250 million, did they use those client funds from FTX to pay the SEC, right? And you see where I'm going with this. Now, Ripple, Stuart Elderty, Ripple's general counsel, commented on the SEC's released annual report. And the agency praised itself for bringing in 760 enforcement actions this year, up 9% from last year. And they praise themselves from getting from the cryptocurrency exchanges or whoever 6.4 billion in penalties. Not million, people, 6.4 billion, which is a lot. Okay, I was going to say a shitload. It's a lot. That's up from last year at 3.852 billion. So clearly the SEC is trying to operate as a profit centre, right? And I tend to agree with Stuart Elderty, however you pronounce his name, the general counsel for Ripple. Stuart Elderty blames the SEC for BlockFi's demise as well as engaging in unethical practices, right? He goes on to say that BlockFi had to pay a penalty to the SEC, borrowed 250 million loan from FTX to do it, that maybe the SEC received stolen funds from the clients, potentially, of FTX, and the fact that BlockFi had to pay a very large fund, penalty, I should say, fine. So, I think that's really interesting, what that Mr. Stuart Elderty suggests, because if that's the case, it's not going to be great for the SEC either, forcing people to borrow money to pay fines, penalties, when the regulation for cryptocurrency hasn't even been enabled, okay? And there's no direct dialogue from the SEC. What is the security and what is not? And we know this is all tied with Ripple, okay? So the SEC, in my mind, are to blame, really. I just think they have not got a clue. They're fining people with no clear regulation, and that is just nuts, okay? Nuts. And they're not just fining them small penalties. We're talking about $6.4 billion in penalties this year. I mean, that's huge. And I have to tell you, Stuart Elderty, I don't know how to pronounce his name, Ripple's general counsel, is absolutely spot on about this. Fair income, he really is. Now, let's talk about Ripple and where the case is with the SEC, and this just makes me cross, fair income, because it's gone on forever. Apparently, November the 30th is the next big day. Key dates are November the 30th and December the 5th. November the 30th calls for replies to the motions for summary judgment to be presented by November the 30th. At that point, all briefings should be finished and Judge Torres' final ruling should be or will be anticipated. So that's going to be interesting to see what happens, okay? Brad Garlinghouse, the CEO of Ripple, clearly is hopeful the case will not go for too long. He thinks there's enough evidence that the judge can make a decision on this case without it having to go to trial, okay? That's what he thinks. We don't need a jury. We have enough evidence we've given the judge and everyone else that, this shit thing should just be a decision. So it's going to be interesting to see. Brad Garlinghouse is still calling the resolution by mid next year, 2023. So that should be quite interesting. Now, also on the weekend, there was large shifts in cryptocurrency. And one of them was anonymous, big whale, 30 million XRP was sent to Bitstamp from a wallet, okay? And Bitstamp is a European exchange. Another big move was whales were moving Ethereum to Binance, something like about 85.67 mil. And so therefore, when people are moving big chunks of crypto from their wallets onto the exchange, it generally gives you more information. Are they looking to sell that crypto, those big whales, or are they looking to use margin to trade and buy more crypto or sell crypto? Either way, because of the volumes, we're talking 30 million and 86 million, they're going to be large transactions, okay? Huge. And we should always look at the big flows to get an idea of what the market is doing, clearly. And these were huge flows. And let's talk about Twitter. Mr. Musk obviously going through the whole stuff of getting rid of people and, copying all that flack. But there's something on Twitter today that Twitter is integrating with signal protocols and an encrypted feature for private messaging, so that private messages are encrypted, which I think is really interesting. It's called Twitter 2 and will include an encrypted private messaging feature, encrypted direct messages. The tweets can be longer than 240 characters. Also, a focus on reducing hate speech and, fudders. They're looking to sign up new people. And since Mr. Musk has been in, last week, there's been about 2 million new users a day signing up with Twitter, which is great for Elon Musk. He made it very clear that he wants to make Doge the payment coin. They're doing work with Binance Pay. Also, he wants to make Twitter a billion monthly users in the next 12 to 18 months. Don't forget, Twitter was losing money 8 years out of 10, okay? They were running at a magnificent loss. So Mr. Musk, rightly so, wants to make Twitter a profit center, clearly. You can't go on in business if you keep going at a loss, right? So he wants to expand the verification system with the blue tick, the gold tick, and the grey tick. Maybe it's going to cost more, but I think he's potentially going in the right way, and I do believe Elon Musk will make Twitter a payment system, but also even a cryptocurrency exchange, and also aligned to Binance chain. And this is why Binance is such a good coin. Seriously, it is a no-brainer, right? Very quickly, other crypto exchanges, just to wrap this up. Crypto exchange CoinSquare confirmed a data breach where clients' details, names, wallets, addresses, phone numbers were leaked. That's not great, because then people know who's got crypto and all this sort of thing, and maybe how much crypto. It's certainly not great. These are a lot of the smaller exchanges that we don't have anything to do with. If we trade, we only stay on the big exchanges. Binance, if you're not going to hold your own coin, I would be happy to hold on Binance because it's the largest, and seriously, if Binance goes down, this market's all over, honestly. So if you don't hold your own coin and your own keys, private keys, then, have it on Binance, but make sure it's Binance, right? The big Binance, where the assets sit and where the proof of reserves and liabilities sit and everything else, right? Also, another exchange, Bitfront, which was funded by Line, a big Japanese company. They basically closed. They're closing. There wasn't enough clients. They weren't making enough money. And now, next on the agenda, it looks like Gemini Exchange and Genesis Global. Genesis may potentially go for a Chapter 11 as well. We know that Genesis is looking for more than $1 billion. They went to Binance, but Binance said no. It's not great, right? What's happening with other exchanges? Also, Coinbase, apparently $2 billion of Bitcoin was withdrawn on the weekend as well. The thing is, if you've got to hold your own crypto, hold your own keys. That means you own your own crypto. But if you do hold an exchange, you don't own your own crypto. But if you hold it on the biggest exchange, Binance, Seriously, if Binance goes down, then it's pretty much all over, people. That's for sure. So, but what I'd like to do, for my patrons, I want to do a video for them on 1inch. They released a trader's tool to stop sandwich attacks, and I'd explain that much more. It's basically front running. When someone tries to buy something, you want to swap something for something else. The big traders get into the mempools and basically stack the price, make it go higher, so the person who's looking to buy has to pay higher. Then they come in and then sell and basically, get away with about 3 or 4% profit. And that's a lot when you're doing a lot of volume. So I'd like to do an individual, video on that for my clients, my patron clients. And also another thing I want to do is proof of reserves. Like Jesse Powell from Kraken said, there's no point providing proof of reserves if you're not showing the whole balance sheet and the cash flow statements, right? Proof of reserves should be net assets. In other words, A minus L, minus the liabilities equals P, okay? Proprietary. So you've got to have the net assets, right? The physical assets less the loans and the borrowings and anything else, right? And then individually the property of the exchange, right? So I'll do a lot more detail on that because a lot of people don't quite understand that. So I will put something up in the next couple of days. Read that. I've got a lot to do. Also, we'll be looking at analysis of FTX. Why did we get it wrong? And we take that pretty seriously. We only had invested 4,000, but the thing is, what could we have done better in that analysis, right? And clearly, I should have listened much more to Sam Bankman-Fried. If I'd probably listened to the way he spoke, like at a lot of different things, I would have thought he was an absolute nong. Maybe I should have looked at it because of his age, whatever. But, we're looking at other criteria to basically mitigate, not doing that again and making sure that this other criteria is hopefully going to bring out, some of the negatives, right? A lot of people got sucked in by that guy. Even Tomasek from Singapore, largest government organisation, invests billions, did 8 months due diligence on Sam Bankman-Fried and actually, spoke with him in many meetings. So, I don't feel that bad, but certainly, we need more criteria. And we have a lot of criteria for picking investments, like at least 150 types of criteria. So we're going to be looking at that too for my clients, and we'll be looking at a lot of other things as well. Many, many things to come. We're also working on a great app which will come to our clients early next year, and there's just so much going on. But anyway, guys and girls, thank you very much for listening. I hope you're all well. It's getting cold in Europe at the moment. I hope your team in the World Cup is doing really, really well. It's very exciting. And have a great night, and I'll talk to you soon. Thank you.